So hi everyone, thank you for joining us today at Numina for George's tax expert session. We're really excited to have him, and take it away, George. This will be a really interesting session, so I'm excited.
Yeah, thanks for having me, Alyssa. Like I said, this is a crazy time of year, so it's actually kind of nice to take a break and do a webinar and get away from the chaos of tax season. You know, we primarily work with freelancers, so we have a pretty good idea of the mistakes they make. So I thought just the 5 most common mistakes we see with freelancers would be a good topic. So here's a summary of what we'll go over and what we see as far as the most common mistakes. First, there's an update for 2022 that's pretty important for freelancers. It's a new way of reporting, so I'll go over that just so you guys are aware of it. And then mistake number 1, improper entity and tax structure. That just involves how you're structured and how you pay taxes. Mistake number 2, missing allowable tax deductions. Mistake number 3, not setting up a retirement plan. Mistake number 4, making estimated tax payments or not making estimated tax payments. That's usually a big one, especially for new freelancers. And then mistake number 5, just sloppy or no bookkeeping. So the big change that will affect a lot of freelancers is that there's a new IRS requirement for 1099K. Some of you may have already gotten one. It's a 1099K is similar to a 1099 miscellaneous or a 1099 NEC. It's essentially a report that shows how much you were paid for the year. They're sent out in January of the following year. So prior to 2022, if you did transactions on a third-party network like Square, PayPal, Stripe, you only got a 1099K if you got more than 20,000 in revenue and had more than 200 transactions. And now going forward from January 1st, 2022 on, there's a new threshold. It drops to $600 in payments and no minimum transactions. So if you're getting paid from your clients, Square, PayPal, Stripe, Venmo, Uber, Upwork, any of those platforms, you're going to get a 1099K sometime in January of 2023. So what this means is the IRS will get a report from the network. And then if you don't file a return that either matches or equals that or exceeds that revenue, you'll end up getting an assessment or a letter from the IRS saying you owe more. So definitely be cognizant of that, because it's for some of you, it's going to be a big change. And if you haven't been reporting this revenue, then this year you'll definitely have to. So that's the major change that you should all be aware of. Moving on to the first mistake we see, improper entity structure. So there's 3 basic types of entities that freelancers essentially operate their business under. The default entity is just you as an individual or a sole proprietor. That the taxation for that is just you're subject to tax. You file the 1040 tax form. There's no liability protection if you're operating as a sole proprietor. So people, if you get sued, they can come after your personal assets, unlike the LLC and the corporation. And the nice thing about it is there's nothing you have to do to form it. As long as you're born, you can operate as a sole proprietor. So that's the default. And then the next step up would be the LLC. This is the most common by far that freelancers operate under. The LLC is a disregarded entity, so you have to choose how you're taxed as an LLC, and we'll get into that in the next slide. But Just remember that there's limited liability. The LLC stands for limited liability corporation. So you get the same, almost the same protection as an actual corporation. But the advantage of an LLC is just it's a lot simpler and a lot cheaper to form and maintain. There's a lot of there's only usually between anywhere, depending on what state you form, a fee of anywhere from $100 to $800 annually that you have to pay. California is the most expensive, that's $800, but most states are anywhere from like $100 to $300. So LLCs are a really good vehicle for freelancers. And then the next step up from that would be a corporation. And there's a lot more involved with this. We usually don't recommend this for freelancers. A corporation, you have to file a separate tax return. It's subject to its own, it pays taxes as a separate entity. So you usually don't want to form a corporation as a freelancer, but in some cases it's appropriate. The liability protection is the same as LLC. Usually it's actually a little bit better in most cases. And then formation, that's where it's more expensive, and there's annual and quarterly reporting requirements in most states. So it's just, there's a little bit more administrative type tasks. So it's usually not a good structure for freelancers. And then, so that's the entity structure. Now I'll tell you about tax structure for freelancers. There's basically two ways freelancers can operate. You can operate as a sole proprietor. That's just an individual just operating as a business entity for profit. And this is available. You can actually have an LLC formed and operate as a sole proprietor, as long as it's a single member LLC. This is a pretty common structure for freelancers, or you can obviously be an individual. The sole proprietor files a Schedule C on just their individual 1040 tax return, and that's due April 15th of each year. And the net profit is subject to self-employment tax. If you know self-employment tax, that's the FICA Medicare, which is 15% for sole proprietors. If you're a W-2 employee, you'll see that it's deducted from your paycheck and it's only 7%. That's because the employer is paying the other 7%. So as a sole proprietor, you have to pay the full 15%. This is where setting up an SCorp has some advantages. And a W-2 payroll is not required. And the other option is the SCorp for freelancers. And to have an SCorp, you can't do it as an individual. You have to either form an LLC or a corporation. And this is something that you elect with the IRS once you form the LLC. You have to file a separate tax return that's due March 15th of each year. So there's more administrative costs involved with that. And your net profit is not subject to self-employment tax, unlike the sole proprietor. This is where you get the tax savings. And then the offset is you do have to pay yourself a W-2 payroll. Essentially, you're paying yourself as an employee, as the owner of the S corporation. So I've talked a lot about how S corps can save sole proprietors, so I won't go through the mechanics of how it saves you money, but I will just give you this resource on our website. It's a SCorp calculator. You can kind of plug in how much what your net income is, your net profitability is for the year, and then kind of do an estimate of what a reasonable wage would be. And then it's programmed to calculate the savings that you would receive from being an S-corp, from not having to pay that self-employment tax. If you see the way it works, you'll see that there's some upfront cost with forming the S-corp. You have to set up a payroll. You have to pay the annual LLC fees and other things. So that's why we tell most our freelancers that if you're not making more than like 50 or 60,000 a year, it's probably not worth setting up an SCorp. But if you're over like 60, if you get into the 70, 80 and beyond, then in most cases, you're going to save money setting up an SCorp. So this tool can kind of help you analyze where you're at and how much you can save. So I think with this, on this example, we have a freelancer that is netting $150,000 profit. That's revenue minus expenses. And say they pay themselves a reasonable salary of 75,000, they'll end up saving in self-employment tax $7,000. So you can see there's a pretty hefty tax savings that you can do by doing this, but I won't go into the mechanics of how it works because I've done that on other presentations. So if you guys have any questions on that, you can just feel free to reach out to me. Is there any questions, Alyssa?
Oh, I just put one in the chat, and feel free for anyone to put your questions in the chat while George is going through his presentation as well.
Can you read it? I can't actually read it.
What is better for freelancers, paying annually or quarterly?
Well, we'll get into this, but you're required to pay at least quarterly. You're required to pay either 90% of your current tax liability or 100% of your prior. And I'll get into more of this later.
Okay.
But yeah, you do have to pay up front, and usually quarterly.
Okay, thank you.
So the second mistake we see with freelancers is just missing allowable tax deductions. More often than not, we see freelancers err on the side of caution rather than being aggressive. So when it comes to tax deductions, especially if you are in the creative industry, you have to kind of think outside the box sometimes. So things like your cable, if you're in the creative industry, you're open to a lot more tax deductions than just the standard business person. So like you can write off your cable bill, streaming music platforms if you're in the music industry, like art shows, anything creative related. Like cable bill is especially for if you're in the advertising industry, you can write that because you need to stay on top of current media trends. Trade publications, creative education classes, conferences and workshops. A lot of people think they're doing this because it's a hobby and they like it, but it can actually be a tax deduction. So keep that in mind. And then a lot of times freelancers don't realize that they can write off their cell phone and internet especially if they're working remotely. So keep that in mind. And then like if you're an influencer, you can deduct clothing, costs of background staging in your home, things like that. Research related travel for any clients. So you can write off that. And then another thing to keep in mind for 2021 and 2022, you can write off 100% of meals that you spend at restaurants. So this can end up being a pretty good tax deduction. You can turn a $100 meal into like a $70 meal after the tax deduction. So take advantage of that because it goes back down to 50% after 2022. So keep that in mind. Any questions on that? No? Okay. The third mistake, not setting up retirement plan contributions. There's two main retirement plans that are applicable to freelancers. Solo 401ks, those are for higher earning freelancers. I'd say anybody over 100,000, they can benefit from a solo 401k. But then anybody can set up a regular or Roth IRA. The maximum contribution on a regular Roth IRA is $6,000 or $7,000 if you're over 50. And you get that unless your income's over a certain amount, like 150, that's a deduction. So you get actual tax savings on that in addition to funding your retirement. The max contribution on a solo 401k is a lot higher at 61,000. So that's why it works for higher income freelancers. And then one thing to keep in mind is you can convert from a regular to a Roth IRA in low income years when your tax rate's a lot lower. So if you're in a year where you're just not making that much money and you have a balance in a regular IRA, it might be a good time to analyze and see if it's applicable or appropriate to convert to a Roth IRA. So and here's just a quick calculation of how much you can save making a retirement plan, because anybody who's a freelancer, and if you're saving for retirement just in like a regular savings account or brokerage account, you're not putting it into a qualified plan like a solo 401k or at least an IRA, you're basically throwing money, because like in this example of someone making $150,000 a year, if they contribute $18,000 put into their solo 401k, after you take their blended tax rate at about 17%, which is what it is when you average out the marginal tax rates, you're actually getting basically $4,000, a little over $4,000 free from the IRS. So you're basically throwing away money if you're not putting it into one of these qualified plans every year. So keep that in mind. Any questions, Alyssa? No, we're good. Okay.
Yeah, I just have a quick question. So for let's say if you are doing like content creation or influencing, and I heard you said you are allowed to deduct like, I don't know, clothes or kind of like staging, all that stuff. Is there a minimum income you have to make in order to qualify for those deductions, or what is kind of the number around that?
No, it's just a standard deduction. You take your gross revenues and then you deduct all your business expenses. And if that throws you into a loss, you can still deduct it, and then you can carry forward that loss and write it off against future years' income. So yeah, there's no limit. So
okay,
yeah.
Awesome, thank you.
Yeah, and that's why that's a good question, because that's why it's important to file, even if you didn't make any money in the current year and you had a loss, because you need to file to claim those losses so you can carry forward and write off against future income. So that's a good point.
I see. Okay, awesome, thank you.
And then yeah, here's the fourth mistake. I know we had a question about this, not making quarterly estimated tax payments. So the US tax system is a pay-as-you-go tax system, and so you have to pay quarterly, and there's penalties and interest charge if you don't do that. So a lot of freelancers who are new to the game, this comes as kind of a shock, but you actually have to prepay, not prepay, but pay as you earn, essentially. And the penalty, there's two different types of penalties. There's the failure to pay, and that's 0.5% a month of the amount due. And then there's also the penalty failure to file, and that's a lot higher. That's 5% or 4.5% if you're combining the failure to pay, with a cap of 25% per year. So even if you don't pay, you definitely want to file, because the failure to file is a lot higher than the failure to pay. So even if you owe, like, say $10,000 and you're just avoiding it, don't do that, because even if you file, if you file, you will avoid that failure to file penalty, which is a lot higher than the failure to pay. So, and then the IRS also charges you interest on the amount owed. So keep that in mind. But there is the IRS safe harbor provision. So you have to pay, the way they calculate the penalty, you either have to pay 90% by the end of the tax year, you have to pay 90% of your current liability or 100% of your prior year tax liability. So if in the prior year you had no tax liability, and then in the current year, say all of a sudden your income shoots up to like 150,000, you don't have to make estimated tax payments. But you will still have to pay the total amount due by April 15th of the following year, but there's that safe harbor provision. So keep that in mind. And here's a schedule of when those quarterly payments are due. And they have kind of weird payment periods. The first one's due April 15th. And then the second one's due 2 months later, June 15th. And that's only a 2-month period. And so you have to calculate your profitability for those 3 or 2 month periods, and then just estimate how much you would owe and send in a payment to the IRS. You can pay online or send in a payment coupon. And then the third is September 15th. And then the final one is due January 15th of the following year. So those are the 4 payments you have to make. And if you need help calculating those, there's tons of online resources, online calculators. You can just Google estimated tax payment calculator, or you can reach out, go to our website, and you can schedule a free call and we can kind of guide you through that process. Any questions? Okay, so the last mistake we see, especially with new freelancers, is just sloppy bookkeeping. A lot of new freelancers think they can just track their expenses at the end of the year by scanning their bank account and pulling out the expenses. And this is another mistake. When we sit down with them, when we do taxes and ask about expenses, without fail, we sometimes find hundreds and sometimes thousands of dollars of missed deductions, just because they thought they could scan their bank statement and come up with expenses and give them to their tax preparer, and they just miss out on a lot by doing it that way. So there's a lot of platforms, automated systems that hook into your bank account that you can use. Usually some of them are free, some of them are like as high as like $20 to $50 a month. But for a new freelancer just getting started, there's some free ones that I'll tell you about. These are the main ones that we see that freelancers like and use and recommend. There's Xero. You've probably heard of that one, and that's more of a higher end one. Customizable. That's similar to QuickBooks, but we usually don't recommend QuickBooks because it's just more expensive, and for what you get, it's just not worth it, we think. So Xero's good. FreshBooks, if you have complex billing needs where you need to like set up recurring billings or something like that, FreshBooks is good for that. Wave is free and it's basic, but for a lot of freelancers, it's adequate. Zoho Books, that's another one. That's more of like a whole platform, so it has a lot of other tools. So if you want a whole platform, you can go there and see what kind of products they have. Free Agent, that's if you're bidding on jobs, they have a good platform for that. So you can check that out. And then SlickPie, if you're working globally and need to invoice in multiple currencies, I think that's the only one where you can do that. So for some of you people who are working abroad and need that, check that one out. And then Easy Expense, this is the one we recommend for the basic freelancers who are new. There's a free version. It's a really good basic tool, not complex at all. I'll walk you through how it works. It's just an app. You sign up on the app. You can find it on the App Store. You connect your bank account, and then so it starts reading your transactions daily. And then every time you have a transaction, it'll send you a notification, and you just code it. And even if you have a bank account that you're using for personal and business, which we don't recommend, but a lot of new freelancers do that anyway, just because they're not as established. This is a good tool to help you split out your business and personal. It asks you if it was a business or personal expense, and then if it's a business expense, it asks you to categorize it based on like an office supply or something, anything else, a meal and entertainment. So, and then at the end of the year, obviously it stores all these transactions and then spits out something similar to an income statement. It doesn't show revenues, but usually you can get that from a 1099 and then just give this report to your tax preparer. And that's a really good start to making sure that you got all your tax deductions.
Sorry, I think Akai has a question. He said, are the monthly payments for your bookkeeping software deductible?
Oh yeah, definitely. Yeah. And anything you do that's related to your business, any money that comes out, it's definitely deductible. Yeah. Because you wouldn't be, if you weren't in business, you wouldn't be doing that. So yeah, that's a good question, because a lot of freelancers don't realize that they can deduct all these fees related to accounting and payroll. So yeah.
Is also the payments that you use for co-working spaces, like I don't know how much it is, like $50 if you go into a WeWork, is that also deductible?
Yeah.
Okay.
That is, yeah.
Okay, cool.
So yeah, I mean, that's kind of a summary of the 5 most common mistakes we see with freelancers. But I mean, usually as they evolve in their freelancing careers, they set up retirement plans and overcome a lot of these hurdles and set up bookkeeping. So this is mostly applicable to new freelancers. So yeah, if anybody needs any help with the freelance process, financial wise, feel free to reach out to Tax Hub. We're definitely happy to help. This time of the year, it's a little bit harder to book a free 5-minute call, but anytime after April 15th, it should be a lot easier. So
Awesome.
keep this in mind.
Yeah, I think Cindy has a question. She says, I use Lily for my freelance income and expenses. It lets me categorize expenses. Have you heard of it?
No, Lily, I have not.
Lili, it's a banking app.
I haven't, but I will definitely look into that. So yeah, thank you.
Okay. Yeah, I think we're at time today. I don't want to keep you too long, George. I know it's a very busy time for you. Okay, I think Cynthia says the bank is Choice Financial.
Choice Financial, and the app is Lily.
Yeah.
So it does something similar to the Easy Expense, where it asks you to code each transaction as they occur, I assume.
Yeah, she says looks very
Yeah.
similar. Yeah.
Okay, cool. Yeah, I'll check that out too, and maybe if it looks like something that will help our freelancers, we'll start recommending that. But thank you.
And does anyone else have any other questions? Feel free to chime in or put it in the chat. Okay. Yeah, I think we're at time today. Thank you, George, for taking your time to come speak to us. On behalf of Numina, we say thank you, and thank you to everyone that participated. And yeah, good luck with the rest of tax season.
All right. Yeah. Thanks a lot.
Thank
Take
you,
care, guys.
everyone. Bye.
Bye.